What's going on, you guys? This is Aaron, part of the Winner Circle. I'm shooting this video because I wanted to go over some key points, some basics on support, resistance, and trend lines, and how you can utilize them effectively to find key trade setups. Right now, I'm looking at GBPJPY. This is one of my favorite pairs that I like to trade. I have a couple of strategies that we have utilized for GBPJPY that has been very effective. But right now, I'm noticing that GBPJPY is in a very good position for a potential sale, and I'm gonna show you why. Now, right now, I'm on the hour, but I'm gonna take it back. When you're drawing your support and resistance lines, if you're brand new, your support and your resistance lines is basically your floor and your ceiling to where your market is going to be comfortable at. So I'm gonna pull up a weekly chart so you can kind of get an understanding of where we're at. Right now, this is the weekly chart. Go ahead and zoom in so we can see it. This is where the markets is it the weekly? Yeah, we weekly. Okay. We're on a weekly chart. Now this is where the market started. This is the whole lifespan of GBPJPY. So you have the ultimate high, which is all the way up here, this green line, and I call this my ceiling. So on my weekly chart, I have the ultimate high, which is the high point of the market where it's ever been. I have the low point, which is here, this green line. This is the lowest that it's ever been, and it actually touched it once, twice, 3 times, 4 times, 5 times. So it is tried to break through this price 5 times at the bottom, and every single time it touches the floor, it bounces back up. Touches the floor, bounce back up. Touch near the floor, and it bounced back up. So what we're looking at is support and resistance. Your support is your floor. Your resistance is the ceiling. So whenever price gets to the ceiling, which is here, it tries to break through the ceiling. It didn't break through, so price fell. So you can utilize this price point all the way through. If the market continues, say for instance, in a couple of months from now, market is up here, it's going to use this same price value as the ceiling. And if it doesn't break through, it's going to turn around. So being that you know that if price gets near this point, it has one or two things to do. It's going to stall. It's going to either have to break through with an impulse, or in this case, you're hoping that it turns around because you know in the past, every time it gets to this point, it turns around and it drops. So if you can get it back at this point at the high and you get it as a sell, then you know that you have a lot of pips that you can catch. So that's why you want to use support and you want to use resistance. The same thing for the floor. If price comes to the floor and it touches and it bounces and it comes back up and you notice that it's at that price level again, what you're expecting and what you're looking for is a potential buy setup. So if it doesn't break through and it starts to go back up and you get in for the buy, you ride it all the way up. So you utilize support and resistance to give you an understanding where the market is going to turn around for a trend. Now this is the weekly chart. So once you draw up your weekly support and resistance lines, these red lines is basically support and resistance lines on my lower time frames, my daily or my 4 hours. So I'm gonna go to the 4 hour. I'm gonna zoom in so we can get a better understanding of what the market is looking like. And now on this 4 hour chart, not only do you see support and resistance lines, you also see zones and you see trend lines. Now, the reason why I like to utilize trend lines because there can become an instant to where the market can touch your support or resistance line and it can touch your trend line at the same time, and that is what we call energy points, to where it gives you a higher probable trade setup. And an energy point is something in this area right here. Let's see. Let me draw a circle around it so we can see it. Right in this area right here. Turn it another color so we can see that right in this area, if you notice in this yellow area, price came down. It touched not only this lower trend line, which is a trend channel, but it also touched the support line that we have, and it's also in the zone. So this is energy point because we know not only did it touch the support line, but it's touching the trend line and it's in the zone all at the same time. So we know that this is a high probability for a buy. Then after that, it came up. It came back down to retrace to give whoever missed the first initial move. Market always comes back down to give you a second setup. Then after the second setup, it shot all the way up to the top of the trend line. Now, if you notice, these energy points happen quite frequently. So you don't have to necessarily take every single trade, but if you get a trade to where you can utilize the trend lines, the support and resistance lines in the zone, and here goes one right here. Here's another example of an energy point. You have the market come up. It's right at the support line in the zone, and it also touched the trend line at the same time. You would have caught this trade for a sell and wrote it back down. Here's another valid energy point. Even though it broke the trend line just a little bit, it's still en route of the trend channel. So it's at the top of the trend channel. It just broke it a little bit, but then it stopped right there at your support and your resistance line. So being that you know this is another energy point, you ride it for a sale and you ride it all the way back down to your next zone. Now you could have wrote it down to this zone, it consolidated, moved your stop loss to where you were guaranteed profit, came down to this zone, and being that this zone is the top, in a sense, it was the ceiling for this this market channel at one point in time, I would have probably got out right around here, which would have given you $450 pips. If I'm not mistaken. Yes, that's 450 pips. 90 bars, 21 days. Hold on. Let's go to the short position. I don't want to give you the wrong info. Let's see. Bang. Yeah. A lot of pips. 450 pips or 420 pips. So you would have caught a lot off of this energy point right here. Now what's also doing it currently, we're in a current trade, or we're in a current market to where we were once in this trend channel, but eventually we have to find a break. It's either going to break to the upside, break outside of this higher trend channel or a higher trend line, or it's going to break lower below this lower trend line. Right now, this is the trend channel of an impulse move. So right now we're in a 4-hour. I'm going to go to the daily so you can see where we're at. Right now, we're in a flag pattern. We have an impulse move from the top, shot down, and then it's creating a flag. So being that we have the impulse down, and this is a long flag, as long as this flag does not come above 50% of the impulse, it's still a valid flag. And when you get an impulse down, a flag pattern up, what you're looking to expect to happen is another impulse down. And it can't go no further than maybe here, because this is where the bottom is for this market. It has never gotten lower than this green line. So we're waiting for a break, a potential break of this lower trend line to come back down to at least match this low, or maybe even to match the ultimate low of GBPJPY. So what I did was I put a trend at the top, and when you are drawing out your trend lines, you want to connect your lows. You have a low here, you have a low here, you have a low here, a higher low, and then it started to break here. So you will connect as many lows as possible. We connected this low, this low, this low, and this low. So now we have our lower trend channel. And then you do the same thing for the higher trend. You have a high, a higher high, a higher high, a higher high, and a higher high. So you try to connect as many of the higher highs as possible. That way you have a channel. And you know if it's in a flag, it's going to bounce in between this channel, these blue lines. If it breaks above it, then you know that we're continuing on for a buy. If it breaks below it, then you know that this trend is about to change. And I can kind of see the change already because it started consolidating near this area. We have a head and shoulders pattern here. So we are already getting confirmation that this channel is about to change. We have a shoulder, a head, another shoulder. It started going down. It actually broke the trend line here. I'm going to zoom in so we can see it. I'm going to go to the 4 hours so we can see it a little bit more in detail. It broke your trend line here. And whenever you get a break, you don't necessarily jump in the trade because it can break, fake you out, and then come right back in and continue on and go all the way back up to the top. So you want it to break. You want it to retest the trend line, which is called the pullback. And this is what this is a pullback. And if you notice in this pullback, what did it do? It came to the exact lower point of the trend line because at first it was the bottom portion of the trend line. Now it's using it as a ceiling. Not only is it touching this trend line, past trend line, it's also testing the current top of the trend line that's coming back down. Because you notice, as we said, the market started to change. So I drew a trend line to connect highs all the way down. And once I drew that, we now have a better understanding of where the market continues to go. Right now, it's stuck. It's stuck because it is in the zone here. It has to use it as a ceiling for it to come down. It is also at the very top of the previous low trend line, which is here. And it is at the top of the current high trend line, which is here. So we have 3 energy points all in this area where you could have put in a sale. Being that this is a 4-hour chart, you could have put in a sale and you would have caught these last 6 hours was a sale. So if you had caught it near this area and you notice it hit it here, here, and here. When you get 3 touches, that's when you look to jump in the market. If those 3 touches do not break and it does not give you an impulse move, that's when you're looking to get into the market. And if you had got in the market here and rode it down, you would have caught close to 100 pips. And this is not even a trade. But being that we're at an energy point, you could have jumped in and caught a quick 100 pips. But this is not when you trade. I will wait till it breaks this trend line because it already broke your daily trend line. This is your daily trend line. This is an hourly trend line. So it's not as strong as the daily trend line. But we broke the daily trend line. Now we're waiting for when to get in. So being that it already broke the daily trend line and it started to retrace, when it breaks this hourly trend line, I will jump in the trade. So right now we're looking at GBPJPY. We're anticipating a sell. Now if it does go back up and it goes back up above this level, then of course we're not looking for the sell yet. We're going to find a way to get into a buy. But as of right now, being that we got that impulse move and we got that impulse break on a daily trend line, we're waiting for that impulse break on the hourly trend line, wait for it to come back up to retest, and then we can jump back into the trade. Being that it is Thursday, tomorrow's Friday, usually not a good day to trade Friday unless it's NFP and you know how to trade the news. We may be looking for sales all week next week in GBPJPY. So I was just sharing this video with you to show you why trend lines and support lines can be very effective if you use them together, because you can find energy points where you can get higher probability trades. So hopefully you guys caught some information in this video. If you're brand new, if this language is foreign to you, I understand your concern, but guess what? I was brand new at one point in time. It was foreign to me at one point in time, but it is like reading or learning a foreign language. This is the language of money. Once you learn this language and these charts speak to you in that language and you understand what the charts is telling you, you can interpret that into making money. There's people that don't know how to speak Spanish, but once they speak Spanish, they can go to Spain. Once you learn this language, you are able to turn your phone or your computer into an ATM. So do not get discouraged. If If you're brand new, continue diving into IML TV, continue diving into the IML Forex Academy. Learn as much as you can, watch as many videos as you can until it clicks. Because at one point in time, I did not know what trend lines or support resistance lines was. I did not know what Fibonacci was. I was in your shoes. So as long as you don't give up on yourself, as long as you continue to dive into the education, this language you will be able to speak it fluently, and you will be able to turn it into money. I see you in the next video.